Good morning, good afternoon, good evening, traders. Uh, Alan from Wall Street to Easy Street. We've had some discussions lately, and I'm kind of watching what people are talking about in the chat room, and I realize a lot of people have trouble with price action. They have a lot of trouble deciding, should they be trading to the long side, to the short side, uh, and some people are just not able to get the tape reading thing down very well, or be able to see price action. It is a difficult thing to do, and it does take a long time. So I want to look at a alternative that we can do. I've got some videos like this, I've showed before a year or two ago, but I want to go over it again. An alternative that you can use to kind of help put the odds in your favor, because that's what our trading is about. It's unlike gambling, where when you gamble you're going against the odds. We want the odds in our favor as much as possible when we put our money on the line. So it's a real quick, simple way to do it. After you've done this a few times, it gets to be like second nature, and it doesn't take that long to learn like price action does. So the first thing we do at the beginning of every week is we take a look at the news. We want to see what's coming out during the week ahead, because we don't want to be in a trade when the news is going to be released. There's nothing worse than having a trade go in your favor, or be sitting at a kind of a break-even trade and had news come out that whipsaws you right out of the market. So we want to be flat during those times. So what we want to do here on our economic calendar, you can do this with any of them. This is my FX book. We want to get rid of the things that we don't need to know, because a lot of times less is more. So all we need is high impact news releases. Also, I've unchecked everything here except for what I think is important, which is China, Japan, US, and Euro, because we're going to be trading the Euro dollar. So that narrows down to, this is the news releases that we need to be aware of. So if you have multiple monitors like I do, you can just leave this up on one of the screens. Otherwise, you can take a screenshot or take a picture with your phone so that you can have it handy, write it down on a scratch pad, whatever it takes, because you want to be aware when these events are going to be released. So now we're set for our trading week. So this is the method here that it's a kind of the modified version of Tim Lucarelli's method. I kind of simplified it a little bit. If you want to know more about his method, he has a very inexpensive book out there to buy that I think is worth reading. But basically, we're trying to put the odds in our favor. So we're going to start here looking at we have three basic sections of charts. We got long-term, intermediate, and our short-term trading chart. And the best odds are going to come in when everything lines up in our favor as much as possible. So first thing we're going to look at here is on the monthly and see what's been going on. And we can see that the market's been moving down for several months. For the last 3 months in a row, the market's been moving down. Our area of support is down here, still quite a ways away, so we're still clear to short on the monthly chart. No reason on the monthly chart to go long. So our monthly is saying short. Now we're going to zoom in a little bit better to our weekly, see what we have going on. You can see weekly we've had kind of a range going on now, but you can see we just broke the range to the downside. So as of Friday, we broke that range. So as we look here on the weekly chart, still giving us a downside trade. I'm going to zoom in a little bit closer here. This is the most important chart here, the daily. So the daily chart, for several days now, we've been trading down. Again, there's no bullish candles in here, nothing to tell us that we should be trading to the long side ever currently. So our daily chart is saying we should be looking for short trades only. So now we're set. We know that with the odds in our favor, the odds are favoring a short trade. So we're going to rule out any long trades at this point. Now we skip over here to our intermediate terms. Friday we had non-farm payroll release, so we got this big spike down. So I expect at least a retracement here. What you do when you get these big spike downs is you just grab a fib and go ahead and put your fibs on there. I'm not a big Fibonacci trader, but there's a lot of programs that use the 50% pullbacks. They do that because automated trading, it needs mathematical formulas to be able to work. So we can see where those robots are going to be at by using the 50% retracement. So we really look for this to probably pull back up here when we get these big spikes like this before the fib bots come in. But we're going to mark the low because what we're looking for is what's going to bring in the sellers again. And that's going to be when they break this low. That's going to bring the sellers in. So currently on our hourly chart here, we're looking for a retracement back up here and then down, or break this low, and we're free to short. And this is kind of unusual because we did have non-farm payroll. But let's zoom out here a little bit, and you can still see that the daily chart is screaming to the downside. So our 60-minute chart. Same here with our 30-minute chart, because now we've zoomed in really close. Same thing, it's downside bias. So now we're set for the day, and we do this. This is each day that we do this, and this sets up our tone for the day, which is short side only. So currently, the long-term charts are saying short-term bias to the downside, or long-term bias to the downside. Intermediates telling us same thing, downside bias is our best odds. At this point, now we just need an entry method for entering on those shorts. And there's a lot of different methods you can use for that. Tim, his method is based on a 1-minute chart. I'd like to use a 100-tick chart or maybe a 500-tick chart, because I prefer entering and exits on tick charts. Tim's method is more of trading the pullbacks and using a channel and determining when he's going to be trading to the short side. So basically he would be looking to enter short anytime the market goes above the red line of this channel. So he'd be looking to enter a short here, maybe adding to the position here, adding to the position here. And same thing here, maybe adding on another pop up here, something like that. Here again is another short entry. Another short entry here. Granted, this is a long way up if you were, say, looking for a short here, but that's where you need a little bit better understanding of price action. So once you pop above the red line, you're still looking for the bear traders to come in. So you might have entered short here on this little beginning of a pullback right here, or up here. And the best way when you're using a method like this is to go in increments. That's the way I would like to do it. So you may enter 1/3 of a position here, 1/3 of a position here, and then wait to see what happens. before you enter your last third. Or it's just like back here, you might go, I'll go 1/3 here, and it's going sideways, so maybe I'll wait and wait, and then maybe enter your second third over here. But he also uses the stochastics indicator to kind of help out in ruling out some of these false moves. I'm not going to go in and explain stochastics. There's plenty of information out there on that, but that's just to give you an idea. And the basic idea is you want to enter on the pullbacks. You don't want to enter in the middle of the chart. You don't want to enter when there's likely going to be a reversal. So most traders are looking for confirmation. So they're looking for areas like this where the market's been moving down, and then they're gonna go, oh look, the market's moving down, and oh it's spiking down right here. And this is where most new traders are going to enter short. Then the market starts moving against them, and they freak out. They either get stopped out because their stop was too close, or because it's moving against them, they get scared and they get out, and then the market continues down into profit territory. And that's typically what happens with a new trader. So using a method like this, really it teaches you to buy wholesale instead of buying retail. And like I said, there's a lot of different entry methods you can look at to help you decide when to buy. This method here, this is called the Vegas tunnel. It's something else you can use, and it's the same way. It's teaching you to short at these upper bands, or if you were looking to go long, you'd be going long at these lower bands. So just a lot of different ways to do that. And basically, like I was saying, you want to buy those retail prices. You don't want to buy the wholesale prices and not the retail. So you want to buy when the market's pulling back a little bit. So for those of you that can't see price action very well, or you're not able to kind of get the tape reading down and get the feel of the market, a method like this will put the odds in your favor, and it will increase the number of trades that you profit on. I kind of went through this really quick. I have some other videos where I talk about using a method like this from a year or two ago. You can go back and watch it. May have more detail. And like I said, you can always purchase Tim's book if you want. It's on my must-read list because he does have a lot of good information in his book as well. So I hope y'all have a good trading week ahead. Be aware of these the high-impact news releases. Always you want to be flat when those are going to be coming out. So I hope y'all have a good trading week, and maybe I'll see you in the chat room.